One of my favorite dividend stocks is Altria Group, stock ticker MO. And year to date, they are down 3.5%. Over the last year, they are down 16.25%. They're currently trading at $43.97. Altria recently had their Investors Day, where one of the key announcements was that their dividend policy will go from the 8% dividend payout ratio to a mid-single-digit annual growth target instead. But as mentioned, it is one of my favorite dividend stocks, so if we try to jump into the stock screener, punch in MO as a stock ticker into the stock screener and let everything auto-populate, and let's take a look at the data and the intrinsic value for Altria Group. They have a PE non-GAAP forward ratio of 8.3, which is roughly 20% below the 5-year average. They do offer a dividend yield of 8.5, looking extremely juicy with a pretty high payout ratio right now of 115%. But as mentioned in the start, they are changing their dividend payout strategy. The 52-week low is around $40 and the analyst target price is at $49.6. But let's jump into our dividend data tab to take a closer look at the dividend data for Altria Group. And as you can see here, they are aiming to have a dividend growth rate in the mid-single digits. So you can see here we do have 4.6%, 3%, the 10-year average is 7.6%. So this is also what I would imagine in the long term, that we could see probably the same kind of numbers, like 5% for the last 5 years and closer probably to the 3.5–4% over the long term. If we scroll down a bit to dividend yield theory graphs here, you can see, according to dividend yield theory, it could indicate there is 11% discount to be had at the current time. You can see here on the graph, whenever it goes into the blue, that's where we want to make a buy. Whenever it goes into the red, that's probably where we should look at trimming down our position a bit because it could be overvalued. But let's take a closer look at the intrinsic value. We do have our 6 valuation models. The first one being Graham's revised valuation, where you do take the EPS from the company, the PE of a growth company, combining that with the growth rate of the company, average yield of AAA corporate bonds, and the current yield of AAA corporate bonds. Producing all these together, I do use the Yahoo Analyst growth rate of 4.6 because, as mentioned earlier, I do expect that mid-single digit growth. Combining all these, we do get an intrinsic value of $37.13. The next one is the discounted cash flow model, where we do have the free cash flow from the different years. Using a growth rate, we then project these cash flows into the future. We discount them back to a present value. Then we use the current cash and total debt they have, combining with the shares outstanding to arrive at a fair value of $57.41. The next one is a dividend discount model, where we have the dividend payout from the different years. Combining all those together, we can achieve a growth rate of roughly between 2 and 5%. We then take an average growth rate and applied growth rate. I use 2.5 just to keep it a bit low. I think we'll probably see closer to this than this in the next coming years. Combining that with the weighted average cost of capital, we arrive at an intrinsic value of $70. We then also have the multiples valuation, where we compare Altria Group with its peers such as British American Tobacco, Philip Morris, Japan Tobacco, and Universal Corp. We do take the PE multiple of all those companies, combine them together to get the median. We then use the EPS from Altria Group to arrive at a stock price of $38.55. The next one is the free cash flow valuation, where we have the price to free cash flow ratio from the different years. Using that, we can find a price to free cash flow ratio average, and then we take the free cash flow per share. Using all that, we arrive at an intrinsic value of $43. The last one is the Peter Lynch model, where we do take the growth rate, the dividend yield, and the price to earnings ratio. Combining all those together, we arrive at an intrinsic value of $69.88. Before we jump into the summary, thank you so much for watching. If you haven't subscribed to the channel already, please do so, and please leave a like on the video, and let's jump into the summary, where we do have the summary of all our different valuation models. I don't think there's any idea in excluding any of them, so I will include all 6 of them. We then arrive at an average intrinsic value of $52.64. The current price being at $43.97 could indicate there's an average current discount of 16%. But if we jump in and put a margin of safety of, let's say, 20%, we then arrive at an acceptable buy price of $42. So it's pretty close to a 20% margin of safety. Personally, I think Altria Group is extremely nice income stock, and I love to buy it every time it dips below $45. Obviously, there is a bit of room for some capital appreciation, but it's mainly for the dividend I buy it. It's a very heavily regulated stock, and every time everyone has tried to combat it, they just come back time and time again. And I believe they'll keep doing this for the next foreseeable long future. Thank you so much for watching, and I'll be seeing you in the next video.